Hello, guys. Welcome to another very important and exciting episode today. We'll be looking at the third part of our beginner series in crypto trading. On this third part, we'll be looking at how to establish a trading strategy. I'll be sharing with you the trading strategy that I use myself, and it has a very high win rate success rate. It has a 99% success rate. This is not clickbait. This is not hearsay. I'm going to demonstrate this to you, and I want you to see. So, first, before we can discuss anything, you need to understand that not every day you wake up is a trading day. There are days that you're supposed to enter the market. There are days that you're supposed to take the market, and then there are other days that you're supposed to just sit outside and wait. Uh, Normally, what I usually do 1 to 2 trades in a week. I don't do scrapping. I don't do any form of 5 minutes, 10 minutes entry of the market, then I exit. No, I normally stay in a trade for 24 hours to 48 hours. So that would mean that I will end a trade maybe on a Sunday or Monday or Tuesday, and then I'll stay in that trade for like a full day, 24 hours, or 48 hours, depending on the pump. So that said, I want to demonstrate to you what I do. I want to demonstrate to you how I enter the market. I want to show you the most important indicators that I use, and I hope that you're going to benefit from this third part of the tutorial. That said, to establish a trading strategy, there are very important things that you need to get right. Most important, most important, I've listed what you need to understand. The main reason why traders usually lose money when trading is as far as trading is concerned is use of very high leverage. When you talk about leverage, as you can see here, I am using a leverage of 7x. This is a leverage that I'm usually very much comfortable with, and the highest leverage that I can go for is TFX. Under very rare circumstances, you'll find me with TFX leverage. I like to keep my leverage at 7x because I'm usually very comfortable with 7x. Even if the price drops a little bit, even if the price deviates by negative 500 from my entry, I really do not care because I know that my entry is usually very good. And if there is a small drop in price, the price will still come back to the position of an uptrend. So when you use very high leverage, 10x, 12x, 15x, 20x, when the price drops a little bit, you will be panicking because you'll find that 10, 20, 30, 50% of your capital is under risk. So it's very important for you to manage your leverage. Always make sure that if you're beginning, if you're a beginner in trading, you can just trade without leverage or just use 2.5x. And then as you continue to become better in trading, that is when you allow to increase your leverage. So the first thing and the first most important thing is to ensure that your leverage is 4 or 5x. So there is this is the place that you adjust your leverage. Ensure that you adjust your leverage to 4 or 5x. If you're a beginner, there's no need for you to use very high leverage because if there's a fluctuation in price drop, you'll be panicking. So that's the first thing that you need to understand. The second thing is when it comes to taking profits, take profit only 2 times. If you end up with, let's say, $1,000, when the price pumps to 10%, take the first profit by taking half of your entry. If you end up with $100, $50, take $50 profit. Take 10% profit of your $50 at the first entry, at the first exit. Then the second exit, take the remaining uh, $50 capital when the price gets to 20%. So we'll be taking profits two times. Then at when there's a 10% pump and when there's a 20% pump, and then we exit the market. The reason why I've given out 10% and 20% is because I know past 20% you will start to see some volatility and some drawback of the price going down. And if you do not have the experience required, you might start panicking. So it's very important when the price hits 10%, take the first profit, and 20%, take the second profit and exit the market. Personally, I take profits up to 40%. I take four times of four parts profit. I take 10%, 20%, 30%, and 40%. So when you take 10% plus 20%, that is 30%, plus 30%, that is 60%, plus 40%, that is 100%. So when you take 100% divided by four parts, at the end of the trade, I'll have made 25% profit of the capital that I ended with. So for you, if you take profit at 10% and 20%, that is 10% plus 20%, that is 30%. 30% divided by 2, that is 15%. So you'll have made 15% profit of the capital that you end up with. So that is how you're supposed to understand this thing. So if you ended with the $1,000, at the end of the day you'll have 1,150. That's how it is using this trading method. And that will mean that you'll need to have with 15%, you need to have six trades, six consistent and profitable trades for you to double your capital. So with this method, you only need to have six trades for you to double your capital, and that would mean that you'll need like 6 weeks for you to double your capital. And there are those good times when you have very high volatility and good pump, so that you can enter the market two times in a week. So that will mean that you can double your capital in 3 weeks to 6 weeks. On my case, when I'm using 10, 20, 30, and 40, uh, that would mean at the end of the trade, I usually make 25% profit of the capital that I'm trading with. And that would need like 4 weeks for me to double the capital that I'm trading with. So that is the second thing and the most important thing. Now, so the third thing that you need to understand is volume. So let's talk about first of all, before we can talk about volume, let me tell you the structure of my trading. So I normally structure my trading view into four parts. So this is the first part, this is the first part, this is the second chart, third chart, and fourth chart, which is the last one. So this is just how the chart looks like. So let me expand this chart so that you can have a good view. So this is how the chart looks like, and then I'm going to demonstrate the chart. I'll demonstrate some important indicators on this chart, but before that, I normally use four different time frames. This is the 4 hour time frame, a very important time frame. This is the 8 hour time frame, another very important time frame for you to understand the trend. Then I have a 12 hour time frame, which is not very important as a day time frame. And then the last one is a 45-minute time frame. I'm usually having this kind of subdivisions because my screen is small. I'll be getting a 42-inch screen, and then I'll be in a position to show you everything very well. So this is the thing. 4 hour time frame is very important because any long position starts when the 4 hour time frame confirms. 8 hour time frame is very important because it shows me the direction of the trend. Daily time frame is very important because I use it as a guide to know how many days I am supposed to stay in a trade or outside a trade. Then the 45-minute time frame is the time frame that I use to enter the market. So that's it. I've already said the first thing that you need to do is observe the volume. Entry after consistent red bars, which is a drop. Okay, what does that mean? I will normally enter the market after consistent red bars. So look at this point. So all these are red bars. Red bars, red bars, red bars, red bars, red bars. So this consistently means that we are having a very big drop. So I will always long the market after I've seen all these consistent red bars. They can be 4, 5, 6, 7, up to 10. So these are 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So these are consistent 10 red bars. And then we see a green bar, then some continuation of red bars. So this green bar prints to mean that we are likely getting a reversal of this momentum. Here the momentum is a downtrend. Then this shows me that we are getting a reversal. So I'll be waiting for the opportunity. When we have these red bars, I'll see that we might be having a reversal. And this is the point that I'll be looking forward to enter the market. So that's the first point. Second point, blue wave momentum, drop and confirm below negative 60 in 4 hours. So what does that mean? So let's see. Again, guys, as I've said, I'm using a software called Market Cipher. There's a link in the description of this video. So go get that software if you're serious in trading. So I've said I'm interested to enter the market when this blue wave momentum drops below negative 60 and confirms. So this is a chart. We have 80, 40, 0, negative 40, and negative 80. You will want to take long position when this blue wave momentum wave drops below this solid negative 60 line. So when the price drops below negative 60 RSI line, you'll be looking forward to enter the market. And and the opposite of it is when this blue wave momentum goes above 60, positive 60, this is the point that you'll be looking to short the market. So the first thing we've talked about is the volume. The second thing is this blue wave. I'll enter the market when this blue wave drops below this negative 60 solid line. The third thing, RSI, no split red RSI across daily time frame, and the 4-hour RSI must be green. What does that mean? So RSIs are these two lines. You can choose whichever color you want for your RSI. I'm using the green one and the yellow one. So I want these two lines to be green. The most important line, this one, I want this RSI line to be green across daily time frame. So it means that I look at the 4-hour time frame. So let me expand this. So I look at the 4-hour time frame. I want the RSIs to be green. I look at the 8-hour time frame. Again, as you can see, the RSIs are green. I look at the 12-hour time frame. This RSI is red. But remember what you have said. No split red RSIs across daily time frame. So that's the most important thing. So when you look at when you look at the 12-hour time frame, the RSIs are not split red. What does split red RSIs mean? Let me show you an example of split red RSI. So as you can see, this one is red, this one is yellow. So this one is a split red RSI. This is another split red RSI. So from the 4-hour to the daily time frame, I want my RSIs not to be split red. So if it's a split red RSI, it means that it's still dropping. So I'll have to sit out until those RSIs combine to a single red RSI or they turn green. So that is the 12-hour. You've seen the RSIs. And lastly, the RSI that I'll take is the TOF, is the daily time frame RSI. So I can see the daily time frame RSI green. So that's a good thing. So that RSI mark, we've already gotten it right. And the last thing is, irrespective of whether the RSIs are green or not across the daily time frame, I want the 4-hour time frame to have green RSI. So as you can see here, look at all this part here. Look at all this. All this is a drop. Everything here is dropping until the RSIs at this point turn green. So at this point, this is the only point that I can ever think of longing the market. So not until that happens, I'm going to stay out. So when all this downtrend was happening, I was out of the market. So that is how I protect my money until this 4-hour time frame turns green. Not until it turns green, I'm not going to enter the market. Very important. The fourth thing, entry when 45-minute blue wave confirm at red floor plus green RSI. Good. So what does that mean? I will enter the market when the 45-minute blue wave, this is the blue wave, as we have already talked about this blue wave. So remember, when my screen is subdivided into different parts, I'll be looking at each of these important check marks. Then I tick the one that is right. Not until all of them tick right, I won't enter the market. So the 45 minutes blue wave, this is the blue wave. So I want the blue wave to confirm at negative red flow. So you can see this is a red flow, this is green flow. Red flow. So I want it to confirm at this point. I want it to confirm at the lower point. Confirmation is these green dots. So I want to see a green dot at at this level, at the red flow. So when I see that green dot on the 45-minute time frame, and then again I check the RSI, I find that the RSI is green, then that is the point I'll enter the market. Remember, we started with the volume. The volume indicator, the red candles to mean that the market was really dropping. And after that, we looked at the RSIs across the day to ensure that there are no split red RSIs across the day. Then we looked at the blue wave to ensure that the 4-hour blue wave it's below negative 60. And also the 4-hour RSI, specifically the 4-hour RSI must be green. Then now, when those three conditions tick right, tick right, then I want now to look at the 45-minute time frame to ensure that the blue wave momentum is at the red floor because that is the lowest it can go. Then also the 45-minute RSI is green. So then we have the last point, which is the fifth point that I use, and it is the yellow wave trigger waves. So no yellow trigger waves above 0.0 on entry. Let me explain this. So now I look at the 4-hour. I look at the 4-hour time frame. I want to ensure that you see this cloud of yellow waves, these ones. When the yellow waves are below, you can see they are below 0.0. This is a 0.0 mark. When they are below 0.0 mark, it means that the momentum is going up. This is now how you define. This is how you know the momentum. I use the 4-hour time frame to look at the yellow waves. When the yellow waves are below 0.0 mark, the market is going up. When the yellow waves are above, you can see here they are above. At this point, they are above 0.0. The momentum is going down. So as we speak right now, the price of Bitcoin is 16,583, and all these the yellow wave is above 0.0. So here the momentum is changing. And if you can see, I'm sure if you look at the 2-hour, 45 minutes, and 15, we have already having a red confirmation. So you can see here, we have a red dot here to mean that the market is going down. If you look at the 45 minutes, I'm sure it's the same case. 45 minutes, red dot. You can see the way the market is now dropping. You can see this candle, the market is dropping. So the yellow wave is what I use now as a final indicator to know the direction of the market. So if you have a cloud of yellow waves above zero point 0.0, there is no any reason for you to long the market. But finally, when you see this yellow wave below zero point 0.0, that is now the opportunity for you to long the market. So make sure that you use those five checklists, and if you ensure you use those five checklists, there is no way you are going to lose any trade. I have them in my heart, I have them in my brain, I have them in my head, I have them everywhere. I've memorized them. I work with them. I When I go to sleep, I everything I think about them, I can even tell you them. The first thing, leverage. Make sure that the leverage that you're using is not too high. If you're a beginner, use 4 to 5 x leverage. So that's the first thing. So now the indicators, the things that you need, you want the volume. You want to see that those red candles dropping down to mean that the market was really dropping. Because if the market takes a certain position, I mean a certain direction, then it has to consolidate and then take the opposite direction. So when the market goes up, that is an uptrend, it must accumulate, it must consolidate during a point of distribution, and then the market goes down. When the market goes down during a downtrend, it must consolidate, which is distribution, and then it goes up, which is accumulation, and then it goes up. At the point at the top part of the market, when all those big institutions have made their profit and everything, they have to distribute for the market to go down. At the lowest point of the market, when those big institutions want to long the market, they have to consolidate, they have to accumulate everything, and then the market goes up. So make sure those 5 pointers are everywhere in your chest. Write them somewhere on a piece of wall, on a piece of paper, and then stick them on your wall. Look at them every single day before you enter the market. When you see that the 5 checklists are not right, do not enter the market. You're simply going to lose. There's this perception that Bitcoin trading is very hard, is very crazy and stuff, and too much stories. The reason why people usually fear to trade in crypto is because they do not have the knowledge. I have suffered for 2 years, so there's no need for you to suffer. Just follow these methods, and if you lose, let me know. Because if you lose and then we have a discussion, I'll tell you the reason why you lost. You'll find that there's something that you never used in the right way. There's a checklist that you skipped. And again, these are the checklists. Do not use very high level, just to 4 to 5x. So that is just a general. Number one, look at the volume. Enter the market when you have seen those very many red bars dropping. The second thing, the RSIs, ensure that there are no split red RSIs across the daily time from the 4, 8, 12, and the daily time frames. No split red RSIs. The third thing, blue wave. Ensure that the 4 blue wave, momentum blue wave, is below negative 60. And 2, on that point still, a 4-hour RSI must be green. If it's not green, do not enter the market. Wait, because it's still dropping. Wait for it to drop until the 4-hour momentum, until the 4-hour RSI becomes green. Then the fourth thing is now the entry of the market, whereby you look at the 45-minute time frame. The 45-minute time frame, you're looking at two things to ensure that the blue wave drops uh, to the red floor and confirms. You see a green dot that has confirmed on the red floor. And secondly, that for 5 minutes, the RSI must also be green. And now the last thing is to ensure that you are very sure on the momentum of the direction of the market. So if you see yellow waves below zero point 0.0, the market is going up. If you see yellow waves above, then the market is going down. Follow those 5 things, and you're going to get like a 99% success rate. It's only that I want to be fair not to call it 100% success rate because people might think that I'm not very serious. But technically, that's the 100% success rate. It comes once or twice in a week, and that is only what I do. I only enter the market once or twice in a week. And as a matter of fact, it only takes me 4 weeks to double my capital. To double my capital. So some months to come, hopefully, I'll be trading with some crazy, crazy capital. You see me trade with crazy, crazy capital. Yeah, and I wish you well. I want you to succeed. Make sure you use those checklists and indicators as I have said, and let me know in the comment section if you have any question. Let us interact. Uh, Post your trades, post your wins. Tag me on successful trades that you take, and let's grow together. So yeah, thank you so much for that. I wish I wish you the best. This is just a small and short episode on the part three. We continue to look at other parts, part four and five and six and seven are still coming. So thank you so much.